to another weekly market breakdown. And in today's video, we are going to take a look at the NASDAQ, Dow Jones, dollar index, gold, GU and EU from a technical and a fundamental and a forecasted fundamental perspective. Now, if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, please smash that thumbs up button for the YouTube algorithm there as well. Now, before I get started, just a special thank you to the members of the channel that has been growing rapidly over time there as well. We have Bradley all the way through to Ilya, who's been here the longest. You should be turning Super Saiyan soon, my friend, after 1 month. And I want to say thank you to everyone for the support. I really appreciate it. And if you guys don't know what this is about, it's basically perks that you get on the channel where you can choose for me to analyze any pair you want me to, or I send you 2 daily trade setups to trade as well. If you do want to join, just click the join button on my YouTube video, any of the videos there as well. Now let's just jump straight into the data. Okay, now we're going to start looking at some data that we received this week as well. We had the PMI, we had the I'm looking at old data, sorry. We had the PMI coming through. Powell opened his mouth, he had some stuff to say there as well. But the most important thing is next week we've got CPI, core CPI, PPI, retails. We've got the most important data coming through. CPI is obviously an indicator used to measure inflation, and investors look at this data to make a better decision when it comes to trading. Now, it's important to understand that the way this works is very simple. Now, we have to make sure that we trade the data as we receive it and not before it comes out. Any data, if the CPI data comes through higher, it means that the Fed is more likely to hike interest rates higher when it comes to the 21st of September, meaning the stock market will continue lower and the dollar index will continue higher. If the CPI data comes through lower, then you can expect the stock market to continue higher. But for now, let's go over to the analysis. Now, we're going to start with the dollar index. Now, if you remember the analysis that I did on, I think 2 days ago, and I said to you guys that I definitely expect the dollar index to pull back from exactly where it was. And once again, the market did nothing other than what I said it was supposed to do, and it pulled down there as well. Let me just close this, and the market actually came back to complete that correction. So we can obviously see here we're going to start on the monthly time frame. Now here on the monthly time frame, we can see that, like I said many times before, the market is heavily overextended to the upside, and the market is also currently or has been testing this very strong level of monthly support. Came back to test it as resistance once, and the market's back to test it as resistance for the 3rd time this month. And this time around, we definitely expect the dollar index to break right through it, continue higher, and then we could see it going to 113.152. Jumping straight down to the daily time frame, we can obviously see how the market is currently rejecting this level here as well. So this is more of the important levels that I do want to see the market does break and close above. Firstly, we are going to speak about this level over here. Just looking slightly left, you can see how this level over here acted as a level of resistance once, twice, a couple of times here. Market broke above that, came to test that as support, and you can see how we had this massive move to the downside. Also could be a lot of liquidity here to the downside, and a daily close above this level is going to be the end of the line for the stock market there as well. Also, and then so the best way to approach this, I'm sorry, I was supposed to give you guys a final update there. So the best way to approach this is obviously to wait for the market today to close above this level, and then from there we can definitely expect the dollar index to continue this massive bull run to the upside there as well. Next up, we are going to speak about the NASDAQ 100 there as well, which has been posing some fundamental data, some moves to the upside, and I think it's about time for the NASDAQ to potentially give up some of the gains that it had been getting this week. And the only reason why the NASDAQ was so weak, it was basically because the dollar index was weakening, and that's why the stock market slightly increased higher. Now we're going to start on the monthly time frame. Now on the monthly time frame, the first thing that we can see, we have this massive impulse. After an impulse, you expect a correction to the 61.8, and like I said, the move to the downside for the index, for the NASDAQ, is still expected for the market to continue lower and then hit that previous level of monthly support there as well. Here on the weekly time frame, what do we see? Now from a weekly perspective, it's quite clear that the market had printed this this W formation over here. The market failed to hold the left leg, broken below that, came to test this previous level of resistance as support, and this was also the neckline of the overextended W formation there as well. And now before we continue with this, there's something I do want to speak about, which is the fundamental data that got outlined with this here as well. It says here, this is an article by CNBC, stock futures are up as Wall Street looks to snap after a 3-week losing streak. So we know that the NASDAQ was quite bearish for the past couple of weeks, and this is probably the best week that the market had I don't know, since this time here. And it reads further here, says of the DocuSign surged more than 17% in extended trading after the electronic agreement company reported an earnings beat as well. Dow Jones up 0.61%. Those gains put all major averages on pace to snap a 3-week losing streak. Okay, so stocks have been volatile recently, on the expectation of a 0.75 basis point hike, which is basically going back to that CPI data that's being released on Tuesday. Now, it's very important that you do understand that if the CPI data comes through higher than expected, then the Fed is going to punish the stock market there as well. If that 0.75% come through, then that is the end of the line for the stock market. It says here, I think that people are grossly underestimating what the Fed is going to have to do to fight inflation. I mean, I could have said that as well. You don't see me on CNBC. Any case, so here on the daily time frame, we can obviously see that the NASDAQ currently is testing this level over here. This level in the market acted as a level of support. Market broke below that. It's back to test it as resistance. Pullback definitely expected on the NASDAQ. The market could potentially just come back and break the retest this level that it had broken above, printed this massive impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the low to the high, we could also see the market pull back slightly lower, but I do expect the NASDAQ in the short term to continue lower, and then from there we could definitely start monitoring the price action once again and see which way the market wants to go from here as well. So that's where we are going to leave at, and once we got the CPI data, we should be able to make an informative decision. Similar price action here on the Dow Jones, but on the Dow Jones you can go slightly to the left, and you can see how this level over here acted as a level of resistance, broke above that, tested as support got broken. All of that support is now being tested as resistance, and we can see how the market also printed this level of resistance here. So we do expect a pullback to the downside, and then from there, once again, depending on what the CPI data says, we're going to monitor price action to decide whether we want to go up or down. Next up, we do have gold. Now, gold also very interesting, still stuck in this monthly consolidation that we have over there. Gold slightly pulled back now, then it's busy testing this previous level as support, as resistance. Again, if we're expecting the dollar index to increase in value, then by all means we have to expect the gold to decrease. This is a very interesting structural level that the market had printed here, acted it as support, and this was a whole liquidity run that the market had broken below that, came to test it as resistance, broken above that, tested that previous support as resistance, broken back below that level, and again we can expect the market to continue lower based off the negative correlation it sits with on the dollar index. Next up, we do have and here on the daily time frame, we can obviously see how the market had come back to test a strong level of resistance over here, acted as a level of support. Again, market broke below that, tested it as resistance as well, and we can definitely expect the gold also to continue lower in the short term, because for months after months after months, all gold ever did was move sideways and probably blew like 200 accounts while doing that as well. Next up, we do have GBPUSD. Also, nothing much to say about this trade this year. And you can see how this thing is basically being punished for this bull run that it had there. GBP currently the weakest currency that we have over here. Also, I'm just going to go straight onto the daily, and we can see that the market is probably going to close once again back into this consolidation phase where we have that wicks. So again, this is going to be a very important thing for us to see once again. If we do get a daily close above this level, then by all means we can expect the pullback, and then probably expect the market to continue higher there as well. Alternatively, if this daily closes back in there, then you can expect the market to continue lower, and lower than this, it's probably going to be a lower low. Okay, so let's just see, wait and see where this daily candle is going to close. Next up, we do have EURUSD. Now, EURUSD, same story over here. You can see EURUSD is also literally being pulled back into this area here once again, where it had been consolidating for quite some time as well. But I think Euro has enjoyed that little bit of bullish momentum, making everyone believe that it was going to go higher. Once again, we can expect this mark to continue lower, and this lower here would probably set at this level here as well. Now, the best way to approach this is quite easy. We obviously need to wait for the market to break below this level, and on the retest we can then start looking for a continuation to the downside. Now, thank you for your time, and as always, cheers for years.